Hey everybody, Brian here. It's Wednesday, the June 1st, 2016, and we had a very impressive session for the market today. The S&P 500 finished with a gain of 43 cents or 20 basis points, and that came, of course, after the gap lower that brought us down to the level that we were hoping would be support, and it was in fact. So now we know that this is clearly an important level going forward, and that at this point in the S&P 500, if you're long the index, stops would go underneath this level at this point. That's where we saw the 5-day moving average along with the volume weighted average price since that recent gap lower. And then again, as I said, we recovered very nicely here. We're back above and we're above almost the entire session, that volume weighted average price. And we are holding also above the 2-day volume weighted average price from where we lost ground yesterday. So very constructive action. The daily chart is still positive here, obviously, and this is looking like right now, if we're in correction mode, it's more likely to be a correction through time rather than through price, because we now have our key level of support. This is our most recent relevant higher low. Any stop should be, long should be protected against that for an intermediate term trend. The Nasdaq, we've got the 5-day moving average that, yesterday we were looking at 109 as the important level of support. Now we can move that up basically to this area in here near about 109.75. So our first potential level of support if we pull back tomorrow is 109.75-ish. This volume weighted average price will be rising as well. We could probably start to take a look in a couple days at this volume weighted average price that is off of the lows of the 19th, and same would be true for the S&P 500 if we pull back below first the 209 level. We're not going to concern ourselves with this VWAP until we get back below this level, if we get back below that level. And same would be true for the Nasdaq, that we've got two levels above us before this volume weighted average price becomes relevant. So for right now, to squirrel that away in the back of your mind, and we may take a look at it if this market weakens, but there's nothing here to suggest it's quite the opposite. The market had the opportunity to sell off. Instead, the buyers came in and regained that upward momentum. The Russell 2000 came down a couple days ago to that 114 level. That's the level we've been focused on. And now today, ahead of that number, we're going to say that today's low near, let's just call it 114.50, is our key level right now, because one, that's where we had seen some support found in here today, and it was prior resistance, and it's where the 5-day moving average will be. And this volume weighted average price from the 24th is also rising and is likely to rise up into that area. So we saw the Russell 2000 add to its gains, and the people who are looking for a resistance at this level have yet to find it. Of course, this is what we've been calling a potential level of resistance, something to be aware of, but not something to take action against, not until we see a pattern of lower highs and lower lows below a flat to declining 5-day moving average. And this 5-day moving average is obviously still advancing, and we are still well above it. The semiconductors, same exact story here. This is the market that a lot of people have been saying it could not get through, all of these levels. This was the first level it wasn't supposed to get through. This was the next level it wasn't supposed to get through. And then, of course, this level it was not supposed to get through. Instead, those potential levels of resistance have just been a place where fools sell short. And I mean that because there was no evidence to tell it short, not even from the shortest of time frames. So it's foolish to sell short just because you think it's a potential level of resistance. And the semiconductors have been proving that over and over again, as they've been the first market group to really take off. And now, this group is at new highs, of course, again for the year with today's close, and we took out the highs from the fourth quarter of last year. So until this market sees a pattern of at least getting back below 56.50 and staying trapped under that 5-day moving average, it is foolish to sell it short. And the biotechs continue to rise as well. Their key level for the intermediate term would probably be today's low, and then just below that at 275-ish. We have, of course, this 5-day moving average that's rising. If it should continue to rise at this rate, we'll meet up with these lows tomorrow. And then if we get a pullback into there, we would want to see that hold as support. But right now, again, there is zero evidence that there's any reason to sell these. Apple, as I mentioned, We should be out of this one right now. It is correcting a little bit price-wise at this point, but I don't see that there's a good place to sell this one short, not with that year-to-date volume-weighted average price, which we did close below today as well, so that's important, but I think it's likely to be a battleground that I think it's going to suck some shorts in and then come back up and really kind of hold up in here. But that's just what I think. Right now, the evidence says we have a lower low, but we have a rising 5-day moving average. This is highly cautious in this area. This is a place where we want to be cautious. I don't think it makes sense to sell short, but I don't think there's any reason you should have been stopped out of any longs that have been initiated since that failed breakdown over here in the middle of last month.